Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. So yesterday I decided not to post on this channel, but I decided to post on my second channel talking about dollar cost averaging and the differences between that and lump sum investing. If you're curious about that or just want to support me in any way, I'll link that above right now. But today I want to be talking about a green energy stock that had a really tough earnings report this past week. And I was kind of looking for stocks to talk about. And after I saw this earnings report, I thought this was a stock that deserved to be discussed because this has a very long track record for being on the stock market. And I've talked about a very similar stock. I've talked about Plug Power, ticker symbol PLUG in the past, but I've never talked about FCEL Energy stock, which is ticker symbol FCEL. And this is a stock that's been requested a decent amount on this channel, but I always like talking about these types of stocks that are very speculative in nature after the earnings report because you get a better idea of what's going on with the actual company. So FCEL has been one of the top performing stocks on the NASDAQ, being up 345% in 2020 and being up 37% already in 2021. But this week they've announced their earnings report, and Wall Street did not really like what they saw. And as a result of that, it fell pretty significantly. In the past 5 days, we've seen the stock fall from $18.50 down to the current price around $15. And it's in the middle of its 52-week range, with its highs up at $29 back in February. And as you can tell, it's fallen significantly down to $15. But it has 52-week lows down in like the $1 to $2 range. This is a stock that's been very volatile in the past couple months. And so I kind of wanted to discuss what's been going on with it. And from the 3-month chart, you can see that it had an incredible January, and then similar to what we've seen with a lot of the other renewable energy stocks, the end of February was not too kind to it, and then with the earnings report that happened this week, the past month and a half have been kind of rough. So in today's video, we're going to be breaking it down into 3 parts as always, with timestamps in the description. Part 1 will be a discussion about FCEL, talk about the history of the stock, explain what it is, and have a discussion about the earnings report that just happened, because I did spend a decent amount of time looking through the presentation that they released. Part 2, I'm going to be hopping onto the charts and talk about what I see as a potential good entry, because this is a stock that's been moving pretty aggressively in the past couple of months. But I did find an area on the charts that I'm going to be watching as being a potential entry point in the future. And then part 3, I'm going to give my final thoughts on FCEL Energy, ticker symbol FCEL, for a long-term investment. Also, just a reminder, this is not financial advice. And with that out of the way, let's hop right into it. So what is FCEL Energy? It's a company that makes fuel cells and other energy storage from hydrogen-rich fuels like natural gas and biogas. And they currently have more than 50 fuel cell plants spread out across 3 continents. So this is a company that's been around for a long time. And currently they have 250 megawatts of capacity. And here's what they have as their business model on their website. They have power plant sale or lease. They have recurring service revenue for 20 years or more. And for people that have been around this channel for a decent amount, anytime I see recurring revenue, my eyes just kind of light up. I think that's the most attractive way to make money. And that's why I've invested in something like Adobe recently. Link to that will be up above right now. And they have the sale of electricity, licensing, and royalty revenue, and advanced technology project revenue. And similar to Plug Power stock, ticker symbol PLUG, there's been a stock that's been around for a long time. Plug Power became public around 2000, and FCEL has been traded on the New York Stock Exchange since 1992, and has been a company since 1969. So this is not a new company that we've been seeing. Maybe some of the EV stocks that have been relatively new companies that have seen a lot of growth in the past couple months. There's been a stock that's been around for a long time and just recently has seen a lot of success on the stock market. And while the company had an incredible 2020 for its stock price, here's the history of the stock since 2000, and it's not pretty. I really don't know what else to say besides that. As you expect, a company with a stock history like this has gone through a couple stock splits that keeps its price over the dollar amount threshold that's required to be listed on the New York Stock Exchange. And from the numbers that I could find, the company has gone through 5 total stock splits dating back to 1999 and actually went through 3 splits within 2 years. So it's a stock that's had a really tough time over the past 2 decades, but now recently it's really gotten into a full stride and it's done really well. So how does this compare to the history of another hydrogen fuel cell company like what we have with Plug Power? You can see similar things with Plug and even Bloom Energy. It's been around for only a couple years, but did have a big red year in 2019 before having a solid 2020. Why are these companies seeing incredible gains in 2020 and going into 2021? And I kind of have 3 big reasons that I've noted as explaining this massive move to the upside. The first comes with the results of the presidential election. As it was expected that the Biden administration was going to be investing heavily into renewable energy and green initiatives. And that's been the huge motivating factor in me in switching my overall stock portfolio and why I'm heavily invested in other green energy areas like GE is my largest position. I have NextEra, Brookfield Renewable, and then I even have the solar ETF TAN. So I've been very invested into the green energy space, and that's why those hydrogen fuel cell companies have done very well. Biden's goals include carbon-free electricity by 2035, more solar and wind, and 100% green energy by 2050. So that kind of explains the run-up that we've seen at the end of January going into February, and then as we showed from the charts, the second half of February was not kind to a lot of these companies. But one of the other areas that I saw as being a potential catalyst for this crazy increase in stock price has to do with the kind of change in investor sentiment that we've seen in the past year. With the stock market crash that we had almost a full year ago, a lot of investors have changed the way that they've been investing in the stock market. You go away from a lot of the blue chip stocks that don't have as crazy growth and into these speculative stocks. We've been seeing a lot of stuff with like the EV stocks, the GameStop, the AMC situation. People have been moving their money into speculative plays, and these hydrogen fuel cell companies have really struggled for the past decade plus, but there's a lot of hope and speculation going forward, and that's why we've seen a lot of money getting poured into these companies, even though maybe the financials and the fundamentals don't really warrant that type of move up. People have been moving their money into more speculative plays, and that's why we've seen some major increases in EVs, hydrogen fuel cell plays, and even the solar stocks. So now we have the inflation worries and the increasing yield of the 10-year treasury bonds, and people started to cycle out of the speculative stocks, myself included. And so that's part of the reason why we've seen this major run up is people were investing in speculative stocks, and now people are cycling out of these speculative stocks and going into more of these stable plays, as there's some kind of worries about what the stock market is going to do in the upcoming 6 to 9 months. And so that's kind of where we are right now. So why is it speculative if hydrogen fuel cells will be a part of the future, and these are companies that have been around for a long time? The easiest way to explain it is that their fundamentals are not pretty to look at. Let's start with annual revenue for the company. In the early 2010s, a company got up to $188 million in revenue, and the number has fallen down to $71 million. Not a great trend if you're looking for a company to invest in for the long term. And with their net income, you'll notice that the company has posted a net loss every year on this graphic since 2007. And in reality, they haven't posted a profit since October of 1997, the year I was born. So this is 23, almost 24 years of not posting a profit. Does that worry me? No, not a full panic mode. One of the other companies in this sector that I really love, Plug Power, has not posted a profit since 2000. So this is an area that not very profitable, but you're looking towards the future, and that's the whole speculative nature of these type of companies. They are not posting profits yet, but the hope is that in the future they will become more successful and more profitable, and that's where you get the speculative nature of these companies. But part of me worries that not only did they decrease their revenue, but their net loss has increased. Looking at their net margin, which is a measure of how effectively a company turns revenue into profit, they currently have net margins between negative 125% and negative 183%. For every dollar that they bring in, they're losing about $1.50. So not a very profitable company at all, and this number that has been widening for the net loss is pretty worrying going forward. During that time, the company needed a $200 million corporate loan from Orion Energy Partners to stay afloat. So this widening net loss resulted in the problems that led to the stock split back in 2019, as they needed to increase their stock price artificially to make sure that they could stay listed on the New York Stock Exchange. And another way that they've stayed afloat was with share offerings to raise money. Here's one from 2017 where they sold $15.4 million worth of shares at $1.28 a share. And as you can tell, considering the stock price is now at $15, could have been much better if they had waited, but obviously the company was pretty strapped for cash at that point. As we've talked about, this dilutes the value of each of the shares. So every time a company does a share offering, it results in the stock price going down because the value of each share has decreased in value, which is the opposite of a stock buyback, where it removes the amount of shares available. The value of the company stays the same, so the value of each stock goes up in value. So this is the complete opposite with a share offering. And when this happens, it messes up a lot of the metrics that people commonly look at to value a company, and just remember that for a little bit later. And so let's look at the last couple earnings report to get a better understanding of where the company is right now. Here's quarter 2 of their fiscal 2020, where they saw a 105% increase in revenue year over year. And they had a better looking net loss down to $15 million compared to $20 million from a year earlier. So quarter 2 was really good for them, and it seemed like they're going in the right direction. So you get this optimism of maybe the company's turning things around, and the switch of people moving into speculative stocks, you get the share price to increase significantly during that time. Also, they had a backlog of $1.34 billion, meaning these are things that will be in production soon, but the revenue and money has not been taken from it yet, so it's kind of a look forward to see where the company's going to be in the near future. And with quarter 3, the stock went in the other direction and fell 17% based off of their earnings report. They had better than expected sales, but they had a much worse loss than expected. And remember that dilution from the stock offerings that I mentioned earlier? This is kind of where they came into play. Earnings per share can be manipulated by offering more shares because the numbers of the company stay the same, but the per share number increases. And so when you increase the denominator and keep the numerator the same, if you remember from your algebra classes, that means that the resulting number is going to be lower. So it manipulates that value. So this means that their loss per share went from 18 cents to 7 cents. But because there are 50% more shares than there were a year ago, their loss of $15 million was almost 3x what it was the year prior, and their pre-tax operating losses jumped tenfold. So The company did not look as bad when you look at it on a per share basis, but if you notice that they had a massive share offering, you can see that this is a worrying trend and they're going in the wrong direction. But during this time, the share price was skyrocketing, and to take advantage of that, they had another share offering of almost 40 million shares. This allowed them to pay off their $200 million loan to Orion. And now let's talk about the report that happened this past week that has resulted in the stock price falling around 10% the day that it was announced. As you probably would expect, they had a wider than expected loss, and revenue was also below their forecasts. So basically, they made less revenue, lost more money, and they had less of a backlog, which is definitely not a great sign. But they shared that their development backlog will be a total of 40.7 megawatts of energy, which is larger than their current portfolio of energy. So there are some things to look forward to with their backlog, but the backlog was not worth as much as people were expecting and what the company had announced a year prior. But there have been some good news in the space overall, and this is a sector that anytime one of the companies has a good earnings report or has a good news story, the rest of the sector is going to go up with it. So we had SK Group that had a $1.6 billion investment into Plug Power that pushed up the entire space, and then almost immediately after, Plug announced that they were going to have to redo some of their financials back to 2018, and the stock fell because of it. And then Ballard is providing fuel cells for Canadian Pacific Railroad. That was some exciting news, but that's what's been going on, and there's been a lot of volatility as you could expect, considering the stock price has gone from like $1 up to 29 and down to 15. So let's hop on over the charts and I'll talk about what I see there as a potential entry and some of the important zones to watch for fuel cell energy, ticker symbol FCEL.
So usually when I'm talking about a stock that has done incredibly well in the past couple of months, I start with the 180-day chart just to kind of see where it's been moving since the volatility has started. But even on the 180-day chart, it was down at $2 back in November. So this has been a really recent move to the upside, and this is some areas that I charted out. I charted this upward channel, which has been respected a decent amount, and then you have this fall at the middle of February. This is when we've seen a lot of the green energy stocks starting to fall, and so it's been falling pretty significantly, bounced back a little bit, and now it's down 4.5% on the day. But as we go back, I'll just show you the longer chart. You can see that this stock has not done very well in the past. We see a stock split over here. We see some massive drops over here. And as we go back, since we've seen stock splits, you would expect that the stock price is just going to continue to go up. And based off of the stock price, it is up at 3,000 compared to where it is right now at 15. So that's the result of having a bunch of stock splits since the year. I think the first one happened in 1999. So it's been a while. And so let's zoom back into where we are right now. And as of right now, the area that I'm kind of watching, if I wanted to take a position for a long-term investment, is I'd be looking down at the $10 mark. This has been an area where we had the first move up, you had some consolidating, it dropped, and then starts the upward channel and starts moving up. And so this is the area that I'm watching. If I thought this was a decent buying opportunity, down at the $10 mark is where I'm going to be watching. You can see at the 200-day moving average, which is this yellow line, still lagging pretty far behind. The average for the past 200 days has been $7.67. So that is 50% of where it's currently trading. So it's going to have to relax for a little bit. I want to see some sideways motion before I actually decide to buy in. But if I was looking to buy in, the $10 mark is where I'd be watching.
Okay, so we've talked about what's happened with the company recently, and I talked about the support at the $10 mark that I'm going to be watching going forward. So let's talk about my thoughts on the company overall, because this is a very interesting company based off of the long-term speculative nature of the company and the incredible rise in price that we've seen recently. So I have been incredibly bullish on hydrogen fuel stocks for a while, with Plug Power, ticker symbol PLUG, being my favorite. And it's hard to look at FCEL and think that it's a better play than Plug Power overall. And I'm going to kind of explain why, because there are some people that are going to love one company over the other. And personally, Plug Power is my favorite. So let's talk about why. Here's a graphic that shows why I personally like Plug Power and not FCEL stock for a long-term investment. This shows their operating expenses, and the area that I really care about with FCEL that kind of turned me away from the company has to do with they've been spending a lot more on actually selling their products and not as much on research and development. Whereas Plug Power has been pretty consistent with their R&D spending over the past couple quarters. And for a company that's going to be looking towards the future for their profitability and long-term success, I want to see a company investing in research and development, because obviously they're not making a profit. They haven't made a profit since 1997. So you need to be researching and developing new products that are going to help you reach profitability in the upcoming years. And seeing that with Plug Power makes me feel way more confident in investing in them for the long term compared to a FCEL. From their earnings report, they put their fiscal 2022 targets as 100% growth in their generation portfolio, double-digit compound annual growth rate for their revenue, and positive adjusted EBITDA. And the revenue history is not pretty in the slightest. And they've only seen annual growth for their revenue once since 2013. And so having double-digit growth for their potential hopes and goals, doesn't seem very realistic to me personally. And with their positive EBITDA goals, they went from being almost positive to being negative 0.2 million, and that number jumped up to negative 7.4. So they're going in the wrong direction, and they're going in the wrong direction fast. I love this space, and if you've been around my channel for a bit, you'll know that I'm heavily invested into renewable energy stocks because I think they're going to see huge growth in the upcoming years. But when I look at this space, I don't think now is the time to be loading up on speculative stocks. And if I was going to be loading up on hydrogen fuel cell companies, I'd probably be going towards Plug Power, which has been a company that I've been very bullish on for a year and a half, almost 2 years at this point. So I don't think this is going to be the time to load up on speculative stocks. But if it does fall down to that $10 level, I will be watching. I'm kind of seeing what I want to do at that point because this is a space that I want to invest in. And if I can get a company that I'm decently happy with at a fantastic price, I'll call that a pretty decent value. So I'm going to be watching that going forward. And I'm very curious to see what you guys have to say about Fuel Cell Energy, ticker symbol FCEL, for a long-term investment, or if you're watching it more as a short-term play. Thanks for watching this video. I appreciate all support, and I will see you in the next video.